On this video, we're going to show you how to navigate MetaTrader 5, our trading platform, and show you how to place trades. When you click on quotes in the bottom left corner, you can see a list of all the different assets that you can trade, whether it's crypto, currencies, commodities, indices. If there's something that you want to trade and you don't see it on that initial list, you just go to the search bar at the top and then add the asset that you want to trade. And then once you go back to quotes, it'll be there. Once you click chart, you can see the price of the asset that you're trading going up, going down. In this case, we're looking at gold. You can see it says XAU USD and it says M1 because we're on the 1 minute time frame. So in this case, it's showing you how much price is going up or down, and each candle represents 1 minute of time. If you're newer, I like staying on the 1 minute time frame, but you can always change the time frames to get the same chart but a different perspective. When you hit trade in the middle, you can look at your active trades, and when you click on history, you can see the history of your previous trades. Lastly, in the bottom right corner, we have settings. Here you can customize your charts. You can switch back and forth from a demo account to a live account. There's a lot of different options on settings. So when you're ready to place a trade, whether it's your own trade or a trade that you're copying, you go over to quotes, you click on the asset that you're trading. We'll use gold as this example, and then you click trade. So when you take a trade, you need three numbers: your entry, your stop loss, and your take profit. For a market execution trade, you don't need to put the entry price because you're entering at the current price. Towards the end, I'll talk about pending orders, which is a trade for a future price, but for a lot of trades, and for this example, we're going to use market execution. Then you have your stop loss, which is your safety net in case the trade goes the wrong way. It'll close you out within a small loss. Take profit is your target. It's where you see the market going. What's amazing is once price hits either your stop loss or your take profit, the trade will close automatically, so you don't have to be staring at the chart the entire time. Obviously, when you're new, the question is, where should my stop loss and take profit be? Where should I get in? Where should I get out? And that's why copy trading is so key, because you're going to be able to copy trades from expert traders on our live sessions or our app or using our scanners. That's where you'll get these prices from so that you can copy, paste, and potentially profit even as a beginner. If they make a certain percentage, you make a certain percentage. So let's say you're on one of the live sessions and the educator tells you to buy and he gives you the stop loss and the take profit. The last thing that you need to be aware of is your lot size, which is your trade size. Before you hit sell by market or buy by market, this number right here is your lot size, which you need to adjust. A 0.01 is the smallest trade size possible. That means every point that the market moves, every pip that the market moves, you're gaining or losing 10 cents per point. So if the market moves 100 points at 10 cents per point, you would make $10. Then it goes 0.02, which is 20 cents per point, 0.03, 30 cents per point, so on and so forth. Once you have a little bit more capital and a little bit more experience, eventually you'll do 0.10, which is $1 per point. Eventually you'll do 1.00, which is called a standard lot size, which is $10 per point. So if the market moves 100 points in your direction, that could be $10, $100, or even $1,000. It just depends on the lot size that you chose before you took the trade. So how do I know what lot size to use? A super basic rule of thumb is you want to do 0.01 per $100. So if I have a $3,000 demo account, using those rules, I would do a 0.3 lot size, which is $3 per point. Why this is because average stop loss might be 30 pips, 30 points. And in this example, if I was doing $3 per point times 30 points, the worst case scenario is after hitting my stop loss, it would have closed me out of the trade. I would have lost $90, and that's 3% of my overall account. And that right there is what we call proper risk management. You never want to risk more than 1 to 3% of your overall account in any one single trade. If you're in your first few days, first week, make sure to use the 0.01 per 100 rule. Later on, you're going to learn how to calculate it so you're risking exactly 1 to 3% per trade every time. So in this example, let's say that we were copying an educator and he told us to look for a buy. He thought the market was going to go up. He gave us the stop loss and the take profit price. We do our lot size. I'm going to use a 0.1 in this example, which is $1 per point. And then you hit buy by market and boom, that's how simple it is to place a trade. Once you understand the basic terminology, it literally takes 30 seconds to copy and paste a trade. What we're seeing is the price of gold fluctuate, and so your account is fluctuating as well. Let's go over and check the charts. When you're buying with a 0.1 lot size, each time that the market goes up 1 point, you're making $1. I'm going to fast forward this screen recording a few minutes so you can see what happened. It's been about 3 minutes since we placed the trade. Gold's gone up 30 points, so we're at $30. And typically, you just wait for it to hit your stop loss or your take profit, and that's it. You're literally done. But real quick, if you're happy with your profits, I want to show you how you can also manually close your trade if you need to. You hold down on the active trade, hit close position, and then hit close. Congratulations, you just made $30 in 3 minutes, and the profits are secured in your account. Let's take one more trade together, but I'm going to show you how you could do it straight from the chart. When you hit this rectangle in the top right corner, it'll allow you to buy or sell straight from the chart. We're back on the gold chart. It seems to be dropping down, so let's see if we can get in for a sell position, which means we want the market to go down. Boom, I just hit sell. You could also add your stop loss and take profit straight from the chart, and then you can drag it to wherever you want it to go. For this example, let's do a 30-point stop loss and a 30-point take profit. Remember, when you hit sell, your stop loss is going to be above price and your target's going to be below price. Now that we have our stop loss and take profit in place, there's nothing else for us to do. We're just waiting for it to either hit our stop loss or our take profit. I'm going to fast forward the screen recording so you guys could see what ended up happening. 5 minutes later, price dropped and hit our take profit, and we secured another $30. So that was 2 successful trades. We caught one buy and one sell. Now, those were all market execution trades. The last thing that you need to learn is pending orders. The most popular pending orders are buy limits, sell limits, buy stops, and sell stops. The only difference between market execution getting in at the current price and a pending order is that you're getting in at a future price that you set. So for example, let's say you want to get in for a buy but at a lower price. You think price is going to come down first before it goes up. You could set what's called a buy limit, and as soon as price comes down and hits that point, it'll automatically enter you for a buy. A sell limit is the same thing but upside down. If you want to short the market but at a higher price, you would set a sell limit at that point, and as soon as price goes up and hits your sell limit, it'll trigger you for the sell. Now, when you set a buy stop, you think if price goes up, it's going to continue going up. So you would set a buy stop above price, and as soon as it hits that point, it would trigger your buy. And lastly, a sell stop is the same thing, but upside down. You think that if price goes down, it's going to continue to go down. So you set a sell stop below price, and as soon as the market hits that point, it'll trigger your sell position. So when you copy a trade from an expert trader, if they say market execution, that means you're getting in right then and right there at the current price. If it's a buy limit, sell limit, buy stop, or sell stop, they'll give you a future price for you to enter. I'm going to leave you with my biggest tip of advice. Quantity is more important than quality initially. You want to start taking a lot of trades so that you can get used to the platform. And after you take your first 10, 20, 30 trades, if there's anything that you're a little bit confused about right now, all of it will make sense. But the learning is in the doing. It doesn't matter how many videos that you watch. You learn how to drive by driving. You learn how to swim by swimming. You learn how to trade by trading. And that's what a demo account is for. It's there for you to make mistakes, learn before you actually switch to your live account. So now you know how to use MetaTrader. Now you know how to place trades. That's it for this video. I'll see you guys on the next one.